Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, February 6, 2013. Thank you all for tuning in. Let's jump right into the charts here. We'll start off with the usual S&P 500 E-mini futures. You're going to see that the futures are trading lower today by about 4 points to 15.02 per contract. So a decent little dip, 4 points lower than yesterday. So markets coming under a little bit of pressure. You can see the U.S. dollar index catching a nice bid. That is up 31 cents today. Yesterday the dollar was on the weaker side. Today the dollar is on the stronger side, and the market is lower an hour before the opening bell. So again, you have to watch that relationship very, very closely going forward. But let's flip back to the futures chart here, and what you'll see is that we have a weaker open, or at least a weaker start before the opening bell today. A few problems out there. One, you do have the European markets all getting hit today. You have the German DAX down 1.5%. That is the most important index in the European Union. You also have the Italian market down 1.2%, and the Spanish IBEX 35 down about 0.75%, and also France is down about 1%. London market, FTSE 100, is flat, slightly negative by about 0.1%, but they can print their own money a little bit different over there. So traders need to be aware of the European markets each and every day. Problems are starting to emerge in Europe, and we've been talking about that going back about 2 weeks now, and you're starting to see that almost on a daily basis. So I think traders need to be aware of that, and we'll just see where it takes us. But right now, you do have the European markets a little bit on the weaker side, and that definitely could be weighing on the U.S. markets today. But keep an eye on that dollar. Markets will generally trade inverse to the U.S. dollar index. A couple of other things out here before we talk about any equities is the Japanese markets. Japan last night, off the charts, up almost 4%. I think it was 3.78% to be exact. Just a huge move in Japan. Looks like the Bank of Japan's governor, the governor of the Bank of Japan, is stepping down about a month earlier, something like that, and the Nikkei just surged on a lower yen. Again, just they're going to print money. The more they dilute their capital, the higher the stock market goes up. Very similar to what's going on here in the United States and what has been going on in the European Union and in China and in Australia and in India and in Zimbabwe. It's just money printing that looks like it's just endless at this stage of the game. But at one point, the markets will punish the bankers for all of this. But right now, the market is absorbing it and loving it, and the institutions are buying it up. So again, everybody loves a good party, but nobody likes to leave. So one day when the party ends, it'll be lights out. But that could be a while down the road yet to come. So again, Japan, very, very strong on the back of a weaker yen. Traders want to watch a lot of the Japanese ADRs today. They could be in play if the U.S. markets are strong. Okay? All right, let's take a look at some gold and oil. Today, you do have gold up 3 points to $1,676 an ounce. Let's take a look at the USO, the GLD rather, which is a good proxy for gold. And gold is trading right now, the GLD, 162.33. It closed at 161.96. So you're seeing 3 points reflected in the gold price, at least this morning. Again, always remember the GLD will trade to 4 o'clock in the afternoon, East Coast time, where the actual COMEX gold contract will only trade till 1:30. Let's take a look at oil this morning. Light sweet crude is trading lower by $1.44. Everybody understands why. Because oil will trade inversely to the dollar. The dollar is stronger. Oil sells off. So when President Obama or anybody in any of these political administrations say we need to form an oil task force to see why oil prices are so high, just look at the dollar. That's all they need to do. You keep devaluing your dollar, oil prices go higher. Today the dollar is stronger because of problems in Europe, and you see how oil sells off pretty rapidly. All right, let's take a look at the USO this morning. The USO is trading at $34.47. It closed at $35.03. So a nice little 50-cent decline in the USO, reflective of that $1.50 fall in spot price of crude. So again, stronger dollar, weaker oil. If the dollar starts to fade, which it commonly does once the market opens, then oil will get a bounce back up. So keep an eye on the dollar this afternoon or this morning. Let's take a look at some stocks in the news. We're going to start off with Chipotle Mexican Grill. This is everybody's favorite burrito place. Right now the stock is trading around the 302 level. It closed at 305 yesterday. I don't see any great levels here. There's going to be some minor support around 294.90, 295 level. Then I think there's going to be some more support around the 284 to 282 level. I would love to give you more specifics on this, be more precise, but this is more of a light volume stock, and what I mean by that is rarely does it trade 1 million shares. I know it traded 1 million shares yesterday, but the average volume on this is probably between 300,000 and 400,000 a day. So, these things can overshoot both ways. But decent little gap down, and it's actually a strong gap down too. So when you see strong gaps, you got to favor the better level, which is around the 282, 274.65, and then I do like the 265 level for a nice bounce there. So those are your levels on Chipotle Grill. Let's take a look at Disney today. Disney's trading right at $55.75. The stock closed at $54.29. Decently, Disney's coming off of a decent daily chart pattern. I don't think the stock has any more strength than going up to 57, and right now it's only trading at 55.73. So, watch the 57, 57 and a quarter. There should be very good resistance. It's not a fade candidate because of the strong gap, but I don't think the stock has any more upside than that. Let's take a look at Ralph Lauren. This is another light volume name, so it's very, very hard to pick the highs here, but the stock is holding up pretty well, getting a pretty strong gap up. Has a ton of resistance around the 180. Well, it just has a big double top around 182.65. So say 182.65 to 183. There should be very good resistance there. Hard stock to short, hard stock to fade, because it's generally a thin volume, light volume stock. Rarely does it trade over 1 million shares. I know it has done it lately, but generally this stock usually trades about 600,000, 400,000, somewhere in there. So today it is catching a big bid. Remember, the light volume names can overshoot, okay? So it doesn't take much institutional participation to push them higher. But should stall out around that 182.28. I don't even know if it gets up there personally, but it looks like it has a lot of resistance even here where it is around 177. But if it does get there, if you're real aggressive, you want to try to fade it, you can. It's a hard stock to fade. Let's take a look at Panera Bread. This here's another restaurant name like Chipotle Grill. The stock is having a pretty good move, trading right around 167.50. You see it right here. I don't know if this stock has a lot of upside left to it. The weekly chart has a decent little pattern, so we can't rule out a move towards the 180 level. Therefore, I would not be fading this one. But overall, when I look at the daily chart, I'm just not seeing a lot of strength here. Definitely a good little gap up, but it really isn't that that much strength behind it. So I think traders want to be careful. I don't think there's a play on Panera, but I did receive about 3 emails for it this morning, so I'd be real careful with Panera right now. Let's take a look at this. Shutterfly is another light volume name. Coming off of a nice base, though, so this is a strong gap up. The stock looks like it's going to probably hit some good resistance in this general area. I'm going to say $38.70. Maybe it's $39. A ton of resistance around 44 if it could ever get there. I don't know if it will. I wouldn't short this one because of the strong gap, but I would not be a buyer here. It is already overbought. I would not be nibbling on it whatsoever at this level. If you own it, I'd put a trailing stop in it. If you don't own it, I would just leave it alone. Aggressive traders, you could definitely, I think, I don't want to say definitely, there's no guarantees in this business, but you can most likely short the 44 level if it could even get up there. I don't think it will. I think there's a lot of resistance around 38.70, but either way, we're at 38.70 already, so there really is no play at the moment. Okay, let's take a look at Expedia. I forget the news on Expedia, but either way, you can see it's gapped up a little bit yesterday. It has come back in from its overnight session, now trading around 68.85. I think the 70, 71 level is a ton of resistance there. I would not be chasing Expedia up here at these levels. Is it a short? No, it's not. You don't want to fade this one because it's coming off of a decent little base, but I really think it's going to struggle around 70, 71. So there really is no play on that one. Let's take a look at this Take-Two Interactive. Here's another one that had earnings. This stock right now is trading at around $13.50. A lot of resistance here. This one can probably be faded around $14. You can see it got up there after the closing bell. I still think that's going to be a pretty good level. Right now, the gap is, it's not strong, it's not weak, it's more of a neutral gap. Ton of resistance around 14. Okay, so that's what we're looking at. I'm sure there are some other ones out there I may be missing. But again, that's what I saw this morning. So you want to, take it for what it's worth. But again, I like to see these gap ups with volume names, stocks that have a lot of institutional participation behind them. Those are the best ones. Stocks that are light volume names are much tougher to trade on the short side or the long side because they can overshoot. So you want to trade stocks that have that real good volume involvement, and the institutions will generally obey the levels pretty efficiently. But that's what I'm seeing right now. So have a great day, everybody, and I'll see most of you in the chat room a little bit later. Take care now.